Hey guys, this is Steven, founder and CEO of Phoenix FXC. I'm just going to do a quick video on how to do support and resistance on TradingView. If you don't know what TradingView is, it's a free platform to do charts, social charting platform. Get a free account. We made a video on how to get a free account and the basics of it, so highly recommend that. So let's start with how you can do your support and resistance. So I learned this from an institutional trader who trades for hedge funds and banks and trains people to trade for banks. So this is pretty good information. You start on the daily. Everything that you see is going to happen on the daily. And then when you go on a lower time frame than the daily, that's just zooming in on the market, okay? And when you go above the daily, you're zooming out on the market, okay? Now you can do support and resistance on any time frame, but I like to start on the daily. So I'll show you how I go from the daily and I scale down. Okay, so first I'm going to go ahead and zoom in a little bit. Next, I'm going to start plotting some lines. So the key thing is when you do your support and resistance, you're going to want to make sure that you identify the points where price is changing, basically. So like price reversed here, 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 here. You know, you can see all the points pretty well from the daily where price is reversing. Zoom in a little more. Oops. Okay. Zoom in a little more. There we go. Like this. Okay. So this is the most relevant support and resistance. Okay. Okay. So now we're going to start plotting from here. So you can see this is a pretty good spot where price liked to hit multiple different times, and it reacted to this spot. That's the key point. Price reacted to this point, whereas another point the price reacted. You can pay attention to wicks and you can pay attention to the top of the candles. So you can see pretty well price reacted to right around here. And this is the floor. So you have your ceiling and you have your floor, right? Your floor is right about here. This is the lowest it's gone in a while. Right? You can zoom out to find your floor and your ceiling as well. So these are crucial points where price did something. It reversed, changed. You can see another one right here. It even tried to touch it from up here. Let's see another one right here. So the reason I'm marking these is because you can see a touch, lots of touches. This even tried to come down and touch here. Touch, 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 touch. Touch, touch, touch. Touch. More touches. This even tried to touch it. This touched too. Another touch here. You can see even more touches, or even more support resistance on these smaller time frames that I've marked up as well. like we got another one right about here. Excuse the fan noise, guys. Sometimes my Mac gets a little warm. So you can see some touches here. And these are points that price wants to go to. So support and resistance, price wants to move within support and resistance. Price always wants to move within support and resistance. They're just levels that price is moving in between. And major institutions, there's a little more than 6 major institutions that move the price. Lots of little institutions help move it, but the major banks, central exchanges, or central banks and all that stuff, they're moving price to different areas. Algorithms are moving price to different areas as well, trading based on certain things, and when an algorithms from big banks trade, it moves price. Support and resistance is the easiest way to visualize where it's going. And then you also have, on top of support and resistance on the daily, you zoom in a little bit more, right? Go to the hour. So now on the hour, zoom out a little bit. Look at this. You can see our daily markups, right? You can see on the daily, or even if we go to the 4-hour, you can see a little bit more, right? So you can see a little bit clearer each time you zoom in. And that's all it is. You're zooming in. And then you just keep doing this. So here, you can see another level right here that I had marked weeks ago. Another little level right here. You can see price extended out this way for this level, right? Price extended out this way for this level. See how well it expected that? So you saw me take this trend line that I drew 1 or 2 weeks ago. Look how well, we'll zoom in a little bit. Look how well price respected this. More touches. That's a testament right there. Look how well this trend line from weeks ago was respected. Look at that. Beautiful. This is support and resistance at its finest. Another one right here. Another one right here. See all of these that I marked from weeks ago. Right, so you can see as I zoom in, I get more and more support and resistance. See here, there's another one. Look at that. Well respected from weeks ago. How great is that? So you can see your daily where price is moving through different days. And you can, because now keep in mind, a candle on the daily chart is a full day. Each of these candles is a full day. So this is months and months of data, right? That's why we go and we zoom in. So you can see price on the hourly, because now we're on the hourly chart. Each one of these candles is an hour. So like I was saying before, daily chart, each one of these candles is a day. Months and months of data, right? Months and months. Then we zoom out and you can see those little support and resistance that I zoomed in on. So this is how you mark it up, guys. And you shouldn't have huge gaps. You know, gaps like this are pretty normal. You shouldn't have huge gaps. As you zoom in, you'll see more and more support and resistance as you zoom in. So when we go to the hour again, and you can see more. You can see up here, price reacted to this level, right up here. And by doing this, you can kind of figure out where the institutions trade, where price is moving, where are the big banks moving money, and everything like that. So this was from, let's see, you can see it tried to respect here. And then you can also mark some points where price has moved, right? Let's see another one in here. Yep, one right in here. So you can see I marked this one because you have more points that price reacted to, more points that price reacted to. It did something here, right? It did something. It did something here too. And then it did something over here. See that? So now, right here, price just went up here. It's going to this. It's very likely going to be right about here. Right there. Okay? So another thing on top of support and resistance that we want to identify is we want to identify points where price moved, where it changed, it reacted, it did something. Okay? Right here it did something. You see down here, when it reached this zone, it did something. When it reached this spot, these are reaction points. And they quite often correlate with support and resistance. Now, if you're wondering what these lines are, they're session separators. They can be turned off. And the point where price did something. So price reached this point over here, point over here. Ignore the fan, guys. Here's a triple top setup right there. Price did something. Price did something here. Price did something here. Price did something here. You just kind of go where price likes to go. Okay. So now you can kind of see reaction points, right? You see where price did something. You can also see a channel. Very nice channel right here. So on top of support and resistance, you also have channels. Channels are fantastic. Channels tell you where price is moving in a diagonal sense. So this would have been a very nice uptrend. Very nice uptrend. Actually, I could say that this was a channel. Then it kind of broke out here. Thought about going down. Couldn't break this support level. And when it couldn't break the support level, it went back up for another shoot into the channel. And this could quite possibly be a downwards channel. So you have support resistance that's horizontal, and you have support resistance that's also diagonal. Horizontal, vertical, diagonal. You don't see vertical very often. You're going to see a lot of diagonal. And price will move like this. You know, from here, you could have called this a weird looking, very, very weird looking channel, right? Right there. Price broke down here, rode this line, and came in here and started pivoting. You can see this pivot as a W. This is market structure right here, guys. A W. W went up, into an uptrend. Tried its best to break out. Didn't really work. Couldn't break that support, right? Couldn't break that support. Look how many times this support was tested. It was a resistance here. Tried to break up, tested a support, broke through, broke down here, bounced in this. Call this, this is part of accumulation and distribution. So this is accumulation. Banks, hedge funds, institution, they accumulate their contracts and they accumulate their position. You can see they tried to fake people out and make them think there was a sale once here, a little bit right here, and they shot up, right? They accumulated their position. They even tried to fake you out right here really badly to try to make you think it was a sale. So you could even mark yet another support and resistance line right there. You'll get good at spotting these guys, I promise. Gets easier. The more you mark up charts, get used to falling in love with marking up your charts. So you can see price bounced around here, easily shot up, right? That you could call this another channel. Price likes to move between support and resistance, and channels are a form of support and resistance, right? So here you go. That helps you visualize it a little better too. So you can see price bounced around, went in an uptrend, accumulated, shot up, more accumulation right here, another W, shot up. Now it's in the distribution phase. Boom. Dumps everything off, distributes everything, goes down, we pivot. So what have we learned? We've learned that support and resistance goes off of reaction points, right? Wicks and candles where the market reacted. Candles where the market reacted, right here. Market reacted to this, the market reacted to this, the market reacted to this, right? So we plot our support and resistance around there. Okay. We start on the daily, and then we can move down. You can go to the 4-hourly, right? You'll find tons more reaction points. Reaction point here, right? This whole thing, reaction point. Whole thing is a channel here too, right? Isn't that interesting? You could even say this was a part of a larger channel. See that? See that just for visualization. Okay, then you go down, go to the 15-minute if you want. Another reaction point. It's very small, right here. Right here. So you don't really need to mark up lower than 15 minutes, and I wouldn't even do markups on the 15-minute. I would go from daily to hourly. And then you can still trade based off of the 15 minutes. So you can still scalp like this, but now you at least have a visualization of, okay, here's some reaction points, right? Here's some reaction points where price does something here. Price is doing something every time it hits these points. You can see the support and the resistance, you know? can see another small right here. The deeper you go, the more you'll see them. Okay, so this is how you mark them up. And we'll do another video of, okay, now that we've marked them up, what do we do next? What do we do with this? How do we trade this? That's coming up next. Thanks for watching, guys.